Hi everyone, welcome. I just wanted to quickly outline what I'm expecting in the coming week in this video, and I'd like to start off with the dollar index, even though I would typically start with the NASDAQ. The reason I'm going over the dollar index this week in particular is because we do have very high impact news coming up in this next week. This high impact news event will determine many decisions, I guess, moving forward in the United States, and I believe it will create the next trending market for the USA, for anything dollar based actually. So yeah, let's not go too much into that right now and digging in the video. So if you watched a few videos ago when I covered the dollar index, you would know that I'm bearish on this and I'm looking for that sell side liquidity residing there at 99.578, and you should also know that this level is the yearly bullish fair value gap. For those that don't know, let's quickly move to the 12 months chart. You'll notice that we have this bullish gap residing here between this candlestick's high and that candlestick's low. So we have a gap in between, creating a bullish fair value gap. So that line there that you saw, or that's visible on a lower time frame like the daily or the weekly, it's basically the sell side liquidity or the gap that I'm looking to see us tap into. Now, the next thing that I wanted to point out was in that video, I wanted to see us tap into this weekly CB. I know there's so much happening on my charts right now, but I'll try to highlight what I'm talking about as I go in this video. So yeah, I was looking for this gap right here, the CB, to be tapped into, which we did. We tapped into it last week, the week before, and last week again. We actually now created a swing high within this same inefficiency, the same CB. But the other thing that I mentioned in that previous video was that I wanted to see us tap into the premium fair value gap in terms of the daily time frame, which is what this arrow indicates, right? By premium, I mean I measured the previous swing high that I can see visible or significant enough for me to consider to the most recent swing low, and we can see that the only PDA that I saw in premium was this fair value gap above the 50% mark of this range. So I wanted to see us tap into this gap here, then displace lower, giving us a lower time frame shifting structure, then push lower. But I think that because we did not tap into this 50% mark, and because we already now have an SMT divergence between the dollar index and majors and dollar majors out there, I believe we may just see price start gravitating lower towards that sell side liquidity. So I think, based on data and my market experience on the charts, I don't think we will reach that 50% fair value gap anymore. So for now, I'm going to remove the alerts. I'm also going to remove the delineation of the range and everything, and I'm only going to focus on this daily CB. So we have a CB here residing in the discount portion of the range, which tapped into, displaced lower, then failed to take the high, but now we have finally displaced again through it. So the reason I find this very critical is because when we tapped into the CB over there, we created a second fair value gap, right? We respected it just a little bit, pushed lower, then rejected aggressively to the upside, closing above that same CB. For those that don't know what CB I'm talking about or what inefficiency I'm referring to, I mean this one right here. So we closed above it, creating a BC, making it a balanced price range. So at this point, if you had not seen what price would do, right, after seeing such a rejection, such a long tail and disrespect of this CB, and even the fact that we created a new inefficiency, a buy side imbalance over here, you might think to yourself, well, this is a very bullish indication and we're probably going to go for that buy side liquidity, right? That's what you would think, and then maybe that would tap us into that premium gap that we referred to earlier in the video, because this is very bullish intention in price. So what would you do when price respects the gap, expecting a buy side raid, only to do this in the very next candle? So the fact that we disrespected this again, respected it here for a little bit, then disrespected it again one last time, makes me even more confident, or more, I could say, sure, even though nothing is really certain in the market, but makes me even more cautious about this exact fair value gap and a potential retracement to it one last time before we fall off. But then at the same time, the other part of me, let's remove this first. The other part of me that has been trading for some time makes me assume that this move up and down is a balanced price range and price has no need to return back to this area at all. So there is a chance that Monday could open up and consolidate, then give us a bearish fair value gap. Let's say something that looks like this, right? After Monday has consolidated here, staying within Friday's candle range, not taking Friday's high or Friday's low. Then I would expect to see Tuesday manipulate higher into that CB before pushing lower. So this would be my expectation, or something similar to this going into next week. Of course, as I already mentioned, my main target is there at the 99.578 level, or 99.5 if you want to round down. And yeah, so I'm still very bearish on dollar index. Even if we do come and take these highs, that I don't believe we will, I'm still bearish. Let me take a moment here, a little bit of a break here, to ask that if you do like the videos that I make on this channel, I know I don't really ask for this often enough, but if you do find some measure of value in any way, in any shape, anyhow, please do consider subscribing to the channel. I'll try and make more higher quality content than this in the future. And yeah, I mean, if you're already there, just tickle the like button, you know, it's free. You don't have to pay anything. Anyway, let's move on to euro and pound. Maybe we could start off with euro, but I just want to show the SMT divergence, so let's get a clean chart instead and do that. So this is euro dollar on the daily time frame, along with the dollar index on the left side, also on the daily time frame. If we look at this, let's use a signpost of some sort. This candle's high was created on the 3rd of September, so let's label it as 903, right? And this candle's high was created on the 12th of September, so that's 912. If we look on this side, on the opposite side of the chart, right, 912 is over there. Okay, I chose the wrong 2 for some reason. Yeah, I chose the wrong 2 for some reason, but I think we can clearly see that this is the area where this high was formed. In this case, it's a low that was formed. We actually had another SMT going on here between the 2 candles. The fact that euro failed to take Wednesday's low on Thursday was an indication that we are probably going to find price moving to the opposite direction. What I mean by that is that when you look at the dollar, you see that we failed on Wednesday. We succeeded in sweeping the previous daily high on Thursday. So euro did not do the same thing. So that's already another SMT. But if we look at a clearer SMT where we look at the general area or the general swing high, for example, this swing high over here and this swing high over here compared to this swing high and swing low on euro and this swing low on euro, you would notice it's a very clear SMT where euro actually swept the low and dollar failed to take the highs. So that's an SMT divergence, and that's what I find and consider to be the crack in correlation between the two correlated markets, right? So let's label this appropriately. So that's our SMT that I'm looking for, that I would typically look for. Now when I jump over to the dollar index, I mean GBPUSD, we can see exactly the same thing in a more exaggerated fashion, right? So yeah, that's my quick view on the dollar, and let's move on to euro and pound, starting off with the euro. On the euro USD chart, I have given a breakdown a while back, but I'm also looking to be, I'm also bullish on this. Let's remove the previous delineations on my chart. One thing that's easy to spot is that we have a fair value gap, right there, a fair value gap in the form of a buy side imbalance, sell side inefficiency. So that's a BC, a bullish fair value gap over there, and we could see a potential internal range liquidity to external range liquidity. For those that want to trade the personal model that I trade, this is where I'm going to bring SMT again. Remember what I said, that I typically would look for a high time frame fair value gap and then SMT formed within that high time frame fair value gap. So a monthly, weekly or daily time frame is what I consider. Then I look for SMT, then shift to the lower time frame to get my entry. When we look at euro, we already know that there is an SMT divergence between euro and dollar, but we also would look at the directly correlated pair, in this case, which is euro versus the pound. On pound, GBPUSD, we see that we also have the same fair value gap, right? We have the same fair value gap, but one thing that I find interesting, if we split the screen again, is one thing I find interesting is that we also have an SMT. Let's go move up to the weekly time frame between the two correlated assets. This candlestick here on the left side of the screen, that's GBPUSD, was created on the week of the 19th of August, right? So let's look at the low of that specific candle for a moment. Just draw this out in price, in time, I mean. Delete that. We have that candlestick's low. Look what happens when we look at the same candlestick that was created on the 19th of August, but on euro dollar. It was raided. So this is another SMT that we can consider to be critical moving forward. The fact that we failed to take this candlestick's low, we actually failed to tap into its respective fair value gap inside of a high time frame PD array. I don't know how else to make this clearer than it is already, but I'm really bullish on these two because of the dollar, and I'm even more bullish on GBPUSD because you can clearly see it's the stronger one of the two asset classes or markets or pairs. So let's move back again to Euro USD. High time frame PD array, SMT confirmed between the two. What's next? We look for a lower time frame shift. So we jump from a weekly Our lower time frame for the weekly time frame, weekly chart, is the 4-hour time frame. So on the 4-hour time frame, keeping in mind that that's our target there, our drawn liquidity, we just displaced away from this gap. We actually disrespected this balance price range over here. We've created multiple inefficiencies to the upside, and actually we created a range in the process. So going into next week, I'm looking to see if the market is going to be gentle enough to give us a discount of the range, something like that. That's about the 50% of this range, right? This blue line is about the 50% of the range. I would like to see if there's a possibility of price retracing, say, to this breaker, because we got a low, a high, putting a new low from that high, breaking that, making this to be a market structure shift, right? That's, I know I just said a whole bunch of stuff that probably doesn't make too much sense if you don't trade ICT's concept. But yeah, this is our 50% mark. This is our breaker. Let me use a different color for it. That's our breaker, and we also have a discounted fair value gap over here, which is within that same balance price range. So me personally, I am looking to see if price can go below the discounted line, the 50% mark. It doesn't even need to tap the breaker. As long as it dips below this blue line, I just need to see an expansion from there. If it just happens that we do something like this, then decide to have a quick turtle soup within the discounted fair value gap and then push up, I will definitely be looking for an entry on this to take it higher. And as I said, target is all the way up there at the weekly external range liquidity. But yeah, I like this displacement so far. I like the fact that we are disrespecting bearish arrays and creating new bullish ones. We don't even need to tap the bearish one. Looking at market structure right now, we might just use, I said bearish, I meant discounted one. We might not even tap into the discounted portion of the range. We might just use this premium one because of this bearish PDA right here, this bearish fair value gap. That's now an inverted gap. So we could just use this area on Monday or Tuesday, then expand higher from there. And that's the drawn liquidity, because I get the feeling they won't give too many opportunities, too many chances, or too many retracements for higher prices on euro dollar. But yeah, I'm not going lower than this. That's my expectations moving to next week. And now GBPUSD. I've already given you snippets of what I'm looking for. I've already shown SMT divergences and all those things. But yeah, actually on GBPUSD, looking at if you watched my previous video, let's use a better chart, I think. Yeah, if you watched my previous videos on GU and dollar, you would know that I like the respect of this BPR, the balance price range here. We came down to it, we swapped liquidity and started rejecting away, created an order block, created a proportion block. We tapped the proportion block, and now I expect price to just push up from here. I also drew out this line for those that were here on my previous video. I said if we tap the top of this line, it means we failed to create a fair value gap, and to me, I would consider that to be an immediate rebalance. Again, if you are here, you would know exactly what I was talking about, but if you are not, it's basically this. I'm looking for this, an immediate rebalance, which is a tap and push up from here. So I'm expecting the next few weeks and the next few months on GBPUSD to be very bullish to the upside, and my ultimate target is the 1.43 level up there. So yeah, moving down to the weekly time frame, we can see that that high was basically the mitigation block, a low, high, failure swing, then push up. that makes this a market structure shift of some sort, but not a breaker because we didn't take liquidity. We failed to sweep the liquidity there, making this a mitigation block, this series of down close candles. So yeah, looking at the expansion that we have from last week, and considering the fact that we have GBP's CPI in this coming week, I'm really interested to see how far we push higher in this specific coming week. So anyway, now going down to the daily time frame, we have now created a I can delete these unnecessary lines. We've now created, we firstly obviously have the SMT divergence over there, but we've now created a daily order block. You would know that I also pay attention to the wick to body area of a bullish order block, depending on the overall context. The second thing that we created is a very tiny, barely visible, but it's there. It's a daily fair value gap, a BC between this candlestick's high and that candlestick's low. So we created a bullish fair value gap. I would like to see us tap somewhere within this wick to body area, but also would be nice to see a body not close below this small inefficiency in price. I don't want to see us close below the fair value gap. It would be nice. It's not a necessity, but it would be nice. So yeah, I'm looking for an expansion higher from here. Same concept on the lower time frames, like the 4-hour chart. Here we definitely don't need to tap discount. I've measured the range already from the low to the high. Discount is all the way down here. I get the feeling that we will just use this breaker and continue higher. So I'm paying more attention to this fair value gap than the discounted one. So I'm looking for this area to be a possible move up. We actually already created a swing low here, if you pay attention, so we can find a quick liquidity sweep on Monday or Tuesday, or we could even sweep only once on Monday, then wait for Tuesday's CPI to sweep one last time, then an expansion higher. So yeah, I'm looking for this. I'm looking for this buy side liquidity next week, but going through that, I am looking for the 1.43 level ultimately, but that's more longer time, going into probably December or March of next year. But yeah, these are my expectations on GBPUSD, and I'm favoring GU over EU. Even though EU actually looks nice. Going back to EU again, but I want to point out something quickly on the daily time frame, because I wasn't there on the daily. I didn't cover the daily. On the daily, you'd notice that we have a CB right here. I like the fact that Thursday closed above that CB, so that's a good indication for higher prices. In the process, we actually created a bigger inefficiency, a bigger BC in this area between this candlestick's high and that candlestick's low. So I like that. I like this formation so far to support higher prices. Yeah, that's GU and EU. Now we move on to the indices. Let's start with the NASDAQ. On NASDAQ, straight to the daily time frame, because I make nearly daily updates. I can't actually say daily. I could say every other day of the week I would make some sort of update on NASDAQ, right? And of course, if you're interested, you just have to ask me personally on Telegram, then I might give you what I'm looking for a specific day. But yeah, on NASDAQ, I'm looking to see a continuation higher from this bullish fair value gap to those relative equal highs up there. Going through that, we have this massive inefficiency here, which I believe is more visible on the weekly. It's a combination of the weekly and 4-hour, I think. But yeah, there's a buy side liquidity here. Above that, we have this inefficiency, so I'm just going to leave that combination up there. But yeah, I'm looking to see price move higher to those relative equal highs, these buy side liquidity levels that hasn't been swept yet, and that one over there. To get there, I expect us to retrace. I actually expected this retracement on Friday, but we didn't get that. So firstly, on the 4-hour chart, we can already see the bullishness of price action, right? We can see price respecting bullish PDA raise. We just dipped into this BC, pushed up, creating another one here after breaking a swing high. So I expected price to retrace down to this BC, then continue higher to those relative equal highs. So I would not even be surprised if we get there on Monday and from the low of the week there with some sort of SMT of some sort. When we go back up again to the daily time frame, you would notice, let's use a different color for the BC here on the daily. You would notice that this is the BC over here, and encapsulated within the daily one is where we get the 4-hour one. When we go back to the 4-hour chart, you see that this is the swing low that creates the BC on the daily time frame. So in other words, we are just looking for some sort of liquidity to be purged before we move higher, right? And for me, there's no clearer liquidity to be purged than actually tapping into the daily time frame fair value gap. How do I make this make sense? We have the swing low there. I'm looking for a sweep of that liquidity and taps into some sort of some high time frame PDA rate. The only one I can think of is the 4-hour. Then get a 15-minute shift of some sort to aim for those relative equal highs. But yeah, it's a very simple view. I'm looking for this 4-hour BC to be tagged, then we continue higher. But we don't need to even reach there if price is not that excited about the BC, as long as we can take this liquidity, because I know that we are tapping into the daily inefficiency by taking that liquidity. Then yeah, we're drawing liquidity, very clear, smooth edges over here, very smooth highs. So I'm expecting that to be ran at some point in this coming week. That's my view on NASDAQ, and of course the same applies to E-mini S&P 500. The difference with ES is that we are very close to the all-time high as opposed to NASDAQ. We actually just had an immediate rebalance at that same area that NASDAQ had a 4-hour gap. We just tapped the high of that order block, then continued higher. So we might get a retracement, but we don't need to. We don't need to get the retracement. So that's the same daily gap over there. When we look at it from a 4-hour time frame, it looks something like this. So if they are really going to be dramatic about this and drive price lower than this area, then we could actually see the body of the 4-hour order block tagged, the body over there, which is the 100% fill of the daily BC. Then we could see a continuation higher. But considering the fact that ES is the stronger one of the two sisters, I don't think we are going to tag the body of this order block. But if we do, I'm open for that. I'm open for that idea. I'm watching to see what price gives us throughout the course of the week. And yeah, Monday we have an orange folder news, so I'll be watching to see if we get something interesting. But for now, that's all I have. Stay safe, good luck, and good trading.